Warren Buffett, 5 Mistakes Every Investor Should Avoid 2023. In the landscape of investing, there have been many success stories that have come up thanks to their superior wisdom and ability to plan effectively. Warren Buffett is one of them who was once famously quipped that his decisions are not tied to the economy's performance, but rather his investment strategy. Warren Buffett has made some excellent investments over his long career. In fact, some would say that he has achieved unparalleled success in this area. But even for Buffett, there are many mistakes that he regrets. You should keep in mind that investing is not for the timid or daydreamers. It requires courage and the willingness to take risks. It is an entirely irrational process. But Warren Buffett has become arguably the most successful investor of all time by showing that with careful planning, thinking, and preparation, there exists a possibility of beating the market. If you want to be a great investor, it's essential to know how not to invest. This will help you build an understanding of what to look for before you make any investment decisions. Hello and welcome back to another video on our channel, Finance Sense, covering all the latest trends in the financial markets and the economy. There has never been a better time to spot the warning signs and mistakes that most investors make. Many investors make errors when they purchase stocks. That being said, these mistakes can easily be avoided. If you're interested in changing your strategy to brace for the uncertainty of 2023, then keep watching. But before we begin, make sure to like, subscribe, and click on the notification bell to stay updated with our videos. Without further ado, let's head on to the video. Because of the inherent unpredictability of the market, the most common error made by investors is the notion that they should try to time their purchases according to their projections for how the economy will perform in the coming year or two. People are always saying things like, "Oh, it's a moment of uncertainty." All the greatest investors in history have a standard rule about how to handle investment risk. Don't try to time the market. Warren Buffett, Benjamin Graham, and John Bogle warn against buying or selling as soon as stock has reached a given price or on predictions that the trend will change over the next 1 or 2 years. On September 10, 2001, things were uncertain. People were just unaware they were uncertain. Every day is riddled with unpredictability. However, you should view uncertainty as a potential ally because it is an inevitable consequence of any engagement in the financial markets. People pay us for things when they are terrified, so we attempt to price everything appropriately. We make no attempt to keep track of the time. If you buy a piece of real estate close to a specific location, and the following year turns out to be a terrible one in which pests move in and there is almost no rain at all, are you going to sell it for half the price that it was selling for a year earlier? When you know that over the next decades, there are going to be 90 years that are pretty good and a few years that are bad? It would be a waste of time and effort to time things in such a way, especially considering that no one can predict what will happen the next day. The only problem is that at certain times, mainly when other people around them are anxious about it, they become significantly more nervous about it themselves. When people get scared, they tend to feel it together as a group. The previous 18 months have seen a lot of problems in the economy that needed to be cleaned up, and this has contributed to a gradual but steady return of consumers' confidence. But before we move on to the next segment of this video, I just wanted to ask all of you guys what your thoughts are on the mistakes Warren Buffett identified throughout his career that investors should avoid. Were you aware of these mistakes before watching this video? If the answer is yes, then do let us know your thoughts in the comment section below so that we can keep the ball rolling. And with that said, let's proceed to watch the video. A significant number of the potentially risky investments are in far better shape. This year, residential real estate sales are expected to reach 4.5 million units. The United States is home to around 80 million homes, of which approximately 25 million do not have a mortgage. People are putting down appropriate down payments on the 4.5 million homes that are sold each year. This indicates that the housing market is healthy. In many instances, they are making purchases at significantly lower costs. They are doing a better job of covering it with their income. A significant portion of the debt brought on by the liar's loans has been paid off. Therefore, those 4.5 million homes are continuously moving into more responsible hands with each passing day. These are the individuals who are in a position to deal with the payments at the end of the year more efficiently than they did at the beginning of the year. Therefore, the system is purifying itself. But this process takes much longer than a day, a week, a month, or even an entire year. People are under the impression that in order to make money in the stock market, all they need to do is buy a cross-section of American companies and then follow any other course of action, such as listening to the news or reading the paper. As a consequence, they conclude that you ought to engage in trading since you are capable of doing so. If you run a successful company, you wouldn't need to spend time every day considering whether or not to sell it. When you buy stocks, you actually own a portion of a company, and those companies may be very successful. You have the option of selecting the most successful companies in the world. It is insanity to base a purchase or sale on the most recent news. You're in a very profitable line of business. Since you have other people managing it on your behalf, you should do relatively well over the next 5 to 10 years. Therefore, start a number of successful businesses of your own and stick with them. Another mistake that the majority of investors are prone to make is investing in cigar butts of stocks and using the cigar butt strategy when purchasing stocks. In its most basic form, the strategy entails you going on a stroll down the street while keeping an eye out for cigar butts. Then you discover a cigar that appears to be in a dreadful state and is wet. It just had one puff left, but you took it and enjoyed it as soon as you picked it up. It's repulsive. You are free to get rid of it, but it's not necessary. You smoke it quickly because it's so cheap, but it leaves your mouth dry and your throat scratchy. Even though you can make money doing it, you won't be able to make a lot of money doing it. Purchasing successful companies is a lot simpler option to consider. Time is a wonderful company's best ally in the business world. You continue to compound and it continues to generate more business, all the time resulting in an increase in your wealth. However, time is the enemy of a poor quality business. There are significant opportunities in life that need to be taken advantage of. We don't engage in a lot of activities, but when we have the opportunity to do something that will have a positive impact on a significant number of people, we can't pass it up. And doing it, even on a tiny scale, is just as big of a mistake as not doing it at all, which is the worst mistake of all. You won't have 500 more chances as good as this, so you have to make the most of them when they present themselves. There is always the possibility of losing money, even when the market is going up, and this is especially true with stocks. You would give each decision about investments a lot of thought, and as a result, you would make excellent choices as well as significant ones. It sounds like we've reached the end of this video. If you found this video helpful, please hit like and subscribe and comment down below your thoughts in the comment section. This is Finance Sense, helping you keep up with all the latest trends in the financial markets and the economy. See you next time!